Welcome to All Stocks Index, your go-to destination for insightful analysis on companies' performance through a visual and detailed examination of their financial statements. In this video, get a quick overview of Amazon's 2024 Q1 income statement. You typically find a standard 10Q report in an Excel or a PDF file. The goal of this video series is to visually display the information, making it more interesting and engaging. We begin our analysis using this Sankey diagram. It will serve as our roadmap for navigating through the financial pathways of the company's operations. First stop, Amazon's revenue streams. Amazon's primary sources of revenue include online stores, physical stores, third-party seller services, advertising services, subscription services, AWS, and other. Here's how these categories performed in the last 5 quarters. Since Amazon is a seasonal stock, it typically generates the most revenue in Q4. We will compare the first quarters of 2023 and 2024. Amazon saw an increase in sales across all categories, especially from services like advertising and AWS. Revenue in the quarter ending March 31, 2024 was $143.3 billion, a 13% increase year over year. Tracing the revenue back to 2021, Amazon sales grew steadily, overcoming the turmoils of 2020 pandemic and reaching new highs thanks to its growing sales in the services categories. Overall, it is an upward trajectory with an average quarterly revenue growth of 3%. In fact, Amazon generated more quarterly revenue than Apple, Google, Microsoft, Meta, or Nvidia. Only Walmart achieved higher sales than Amazon. Returning to our roadmap, let's zoom into the costs of production. As stated earlier, the company offers both products and services. Total revenue in Q1 was $143.3 billion. Products constituted 43% of total sales, a total of $60.9 billion, while services accounted for the remaining 57%, a total of $82.4 billion. The cost of sales is the accumulated total of all costs used to create a product or service. Amazon spends 51% of total sales in costs, such as buying materials and components, direct manufacturing labor, packaging, shipping, and freight. About 16% of revenue goes towards fulfillment costs. We'll isolate fulfillment as a separate expense due to Amazon's distinctive approach to delivery of goods to customers' doorstep. Fulfillment costs are those costs incurred in operating and staffing fulfillment centers, physical stores, and customer service centers and payment processing costs. In the past 4 years, Amazon had a rough time managing its costs, but recently the costs dropped to 51% of sales, and fulfillment costs stabilized at around 15.5%. To calculate gross profits, we take the revenue and subtract the cost of production. Gross profit was $48.4 billion if we exclude the fulfillment costs. Gross margin is an important profitability measure that looks at a company's gross profit compared to its revenue. Dividing $48.4 billion by $143.3 billion, we get around 33.7% in gross margin. A very strong ratio for any company. Looking at historical data, in Q1 of 2024, Amazon had the highest margin, suggesting that the company retained more from each dollar of sale by keeping the costs low. However, we're not done with expenses. We still have operating expenses, taxes, and others. Returning our focus to the gross profit of $48.4 billion. Let's look at how much Amazon spent on its day-to-day operations, known as OPEX, or operating expenses. Amazon spends around $33.1 billion on OPEX, a significant chunk of their profit, leaving $15.3 billion as operating profit. Amazon's operating expenses are broken down into the following categories: technology and infrastructure, sales and marketing, general and administrative, and other net operating expenses. Amazon spent $20.4 billion on technology and infrastructure. That's 12% of its quarterly revenue. Amazon invests heavily in research and development to stay competitive on multiple fronts. The company engages in e-commerce, cloud computing, online advertising, digital streaming, and artificial intelligence. Therefore, R&D is critical for Amazon because failure to offer cutting-edge technology can lead to loss of market share and even potential bankruptcy. Overall, Amazon efficiently managed its operating expenses over the last 5 quarters. The company found the right balance between reducing the day-to-day costs while growing its revenue and increasing earnings. Amazon's operating profit has been increasing, reaching a high of 10.7% in the last quarter. Another expense that gets less attention is other income or loss, which can originate from interest, dividends, miscellaneous sales, rents, royalties, and gains from the sale of capital assets. Amazon had a net non-operating expense of $2.32 billion, mainly due to other expenses. This brings the remainder to $13 billion in income before tax. Amazon paid $2.5 billion in taxes with an effective tax rate of 19%. We finally arrive at the remaining net income of $10.4 billion. This quarter, Amazon had a 229% increase in year-over-year net income. Let's do a quick recap. Net income, also called net earnings, is total revenue minus cost of goods and services, minus operating and other expenses, and minus taxes. It's the bottom line on the company's income statement. $10.4 billion is what Amazon generates from operation in just a single quarter. We can take it a step further and calculate the profit margin. It is a financial performance ratio calculated by dividing a company's net income by its net sales. In this case, we take $10.4 billion and divide it by $143.3 billion, arriving at a marginal 7.3% profit margin. For every dollar of revenue, Amazon retained over 7 cents. Looking back at the last 5 quarters, we noticed that profit margins grew as revenue increased and operating expenses decreased. Profit margins depend on what the company does. Hence, it's difficult to compare this ratio across companies from different industries. Also, Amazon is unique in its sector, therefore we'll simply compare it to other big tech companies. What's surprising here is that Amazon, with its high revenue, only had about 7.3% in net profit margin, but still double the margins of Walmart. If all revenues are set to 100%, the graph nearly reverses the slope, with NVIDIA being the most profitable company on the list and Walmart being the lowest. The last item on the income statement is earnings per share. EPS indicates how much money a company makes for each share of its stock. It is a widely used metric for estimating corporate value. To calculate this ratio, we take the net income of $10.4 billion and divide it by the number of shares outstanding, which is around 10.7 billion. We get 98 cents per share. It would require more context to better understand where Amazon stands in its valuation. Analysts typically use specific formulas with various assumptions to forecast earnings and to determine the financial health of a company. Check out the last 5 quarters. They have been the most profitable in the entire existence of Amazon. Considering over the last 10 years, the average EPS was only 28 cents. The trailing 12 months EPS stand at $3.57, a combination of the last 4 consecutive quarters. Another profitability ratio that's widely used by analysts is called PE, or price-to-earnings ratio. Simply divide the current stock price by the company's earnings per share. Amazon's PE ratio is 50.53. Is the company undervalued or overvalued? Well, the median PE ratio for the S&P 500 was 25 as of May 2024. However, Amazon is a technology company, so looking at the US tech sector, which is trading at PE ratio of 45, you might think Amazon is only slightly overvalued. Therefore, using PE ratio to derive a stock's value is highly subjective and may depend on many additional factors. In summary, we looked at Amazon's 2024 Q1 income statement and highlighted its key values. Overall, the company appears to be financially healthy with reported highest profits. So, has Amazon reached its peak or can it continue to grow? We will continue to monitor Amazon's performance in the future videos, so stay tuned. If you found this video helpful, check out our other videos on financial statement analysis. Don't forget to like and subscribe, and we'll see you next time.